It's time to do business again on Business Incorporated. We have 55 minutes to go around the world of business, and here's what we have prepared for you. In South Africa, inflation is up 4-month high. That's the number for now. And in Kenya, palm prices are soaring after government extends import deal with Gulf nations. Zambia is looking the way of oil refinery. They have signed a deal, a $1.1 billion deal to build a major refinery in Copperbelt. You're welcome to the program. I'm Ini John Mekwa. We start as usual from the global space. Oil prices were steady on Wednesday after falling for 3 consecutive sessions as a U.S. tariff deal opens new opportunities with Japan and suggests improved global trade sentiment. So we see for this afternoon, it's in the red, 0.2% for Brent, bringing that price down to $68.47 a barrel. WTI is also down 0.2%. $65.17 a barrel coming from there. And so we see both benchmark lost about 1% in the previous session after the EU said it was considering countermeasures against U.S. tariffs, as hope seems to be fading for a deal which is ahead of August 1. U.S. President Donald Trump has said that the U.S. and Japan has struck a deal that includes a 15% tariff on U.S. imports from Japan, and the slide of the past 3 sessions appears to have abated, but much cannot be expected for an upward movement there. China's commerce minister and the European Union's trade chief had a candid and in-depth, that's what they call it, discussion on economic and trade cooperation, as well as other issues that both sides face ahead of the summit. And back in Nigeria, the President and Chief Executive Officer of Dangote Industries Limited, Mr. Aliko Dangote, has revealed that the group's petroleum refinery imports about 9 to 10 million barrels of crude every month from the U.S. and other countries. He made this known when he was delivering a keynote address at the West African Refined Fuel Conference that was held in Abuja yesterday. The event was organized by the Nigerian Midstream and Downstream Petroleum Regulatory Authority, as well as the S&P Global Commodity Insights.
One of the first commercial shocks we came with was crude feedstock sourcing. At the project inception, it was reasonable to assume that in a country producing about 2 million barrels per day, securing crude would be least of our worries. But we were wrong. Rather than buying crude oil directly from the Nigerian producers at competitive terms, we found ourselves having to negotiate with international trading companies who are buying Nigerian crude and reselling it to us with hefty premiums. Of course, as we speak today, we buy about 9 to 10 million barrels of crude monthly from the United States and other countries. I must thank the NNPC for making some cargoes of Nigerian crude available to us from the start to date.
Away from the oil and gas, now gold eased on Wednesday as risk appetite improved after U.S. President Donald Trump announced a trade deal with Japan ahead of an impending tariff deadline, though a soft dollar and lower Treasury yields capped losses for greenback-priced bullion. So we see the number now. Spot gold is in the red. It's down 0.2% at $3,423.44. U.S. gold is also down at the same percentage, bringing it down to $3,437.70. Spot silver is on the flip side, almost 0.5% in the green, $39.75. And platinum is up also 0.17%. The price is $1,484.50. Palladium looks even better than that. It's up 1.33%, bringing the price up to $1,342. Trump has said that the U.S. and Japan has struck a deal that includes a 15% tariff tariff that will be levied on U.S. imports from the country. U.S. and Chinese officials are set to meet next week to discuss an extension to the deadline to move it perhaps from August 1st to August 12th for negotiating a trade deal. This is according to U.S. Treasury Secretary Scott Bessent, offering support to the billion U.S. dollar index languished near a 2-week low against its arrival. And we know that gold is less expensive once the dollar drops and loses value. Now, yesterday, of course, was the MPC decision back here in Nigeria. We've had a couple of conversations about that, but now let's see what the CBN itself is thinking about this. We have the Director of Monetary Policy Department from the Central Bank of Nigeria for this. But before then, we see this is a training that was organized for agriculture and climate sector by ECOWAS.
When you want to mitigate climate effect on agriculture, this is when we bring tools on climate smart agriculture, meaning that you will bring what we call climate smart technologies. So it means today you need to generate improved seed that will not stand long before you may plant rice and waiting 3 months to harvest. The techniques now is to have improved seed, for example, for rice, just for 120 days instead of 3 months, 2 months, etc., etc. This has been already on operation. They should be ready to operationalize the fund as quick as possible for the benefits of the farmers. So when we say for the benefits of the farmers, this is to aim at the end of the day for ensuring food security in our countries and globally for the region.
Under the ECOWAS Agricultural Trade Program, well, we've seen two key issues. One is access to finance, but the second one is what practices practitioners adopt across the value chain. So this event gives us the opportunity to simultaneously tackle these problems. I mean, whilst providing access to affordable finance, we're also able to push banks to begin to appraise agricultural projects with the lens of climate responsibility.
Just before we head back to the Monetary Policy Department Director who's waiting for us in our Abuja studio, I'd like to tell you that Dr. Imomotimi Agama, the Director General of Nigerian Securities and Exchange Commission, is at a meeting in Lagos as we speak. He's commending the impressive growth of the Nigerian equities market and is emphasizing the urgent need to integrate quantum computing into the financial ecosystem. He's speaking at the Commercio Partners H2 2025 Economic Outlook event that's themed Reconfiguration from Global Trade to Quantum Innovation. A new economic era emerges. Dr. Agama highlights how market performance this year has shown resilience and vitality, noting that innovation is now pivotal to sustaining that momentum. He's stressing that there's a need to harness technology in achieving this.
Privilege of not leaving the market. So I have a responsibility in that privilege to turn around the market. And we are turning around the market because as at Friday, we had crossed the 82 trillion mark in terms of market capitalization. It's a new era where intellectual capital and technological prowess will define competitive advantage. Quantum innovation, the next frontier, as it is called, means encompassing quantum computing, cryptography, and communication, promises to revolutionize industries from finance to healthcare. For capital markets, though, quantum computing could redefine risk modeling, asset pricing, and fraud detection, offering unparalleled speed and accuracy. This is the time for artificial intelligence. And in artificial intelligence, we're speaking to predictive or generative artificial intelligence. In Nigeria, we must ask, how do we position ourselves to harness these advancements? Just last week, we had the Genius Act. And I'm sure some of us haven't even heard about it. What is it talking about? How does it affect us? How is it related to the things we do, and indeed to the capital market? I was fortunate to have symbolically, at the signing of the Genius Act, issued an academic paper on stable coins and national security in Nigeria.
Dr. Momotimi Agama there, the Director General of Securities and Exchange Commission, at an event in Lagos, and which is still ongoing even as we speak. Now let's look back to that decision of the MPC to retain all parameters again for the next 2 months. We speak to the Director of Monetary Policy Department, Dr. Victor Obo, joins us from Abuja studio. Dr. Obo, good afternoon and welcome to the program.
Good afternoon, and good afternoon, Nigerians.
So, of course, we've seen headline inflation easing 3 consecutive months. How confident is the Monetary Policy Department that the current rate is optimal to sustain this trend?
Thank you once again. The Monetary Policy Committee, in its wisdom, retained the rates yesterday. And that happened after a rigorous interrogation of the data, both at the global and domestic macroeconomic environment, and noted that even though the inflation is trending downward, and of course for the 3rd consecutive month, which is salutary, there's need to hold the current stance to be able to have a firm grip of inflation so that we don't witness a resurgence. So direct to your questions, the outlook looks very good, and with a number of factors in our favor, we are hopeful that inflation will continue to trend downward sufficiently to a level at which point the committee will decide what next to do.
So how effective has the pass-through from the 875 basis point increase in MPR during the 2024 been in curbing inflation? Are there sectors, manufacturing, small businesses credit, that are still lagging behind?
Thank you. The policy tools at the disposal of the committee have been deployed effectively, and you can see the results for yourself. We have seen inflation trending downward, gradually, and I have said this in several other fora, that inflation or prices generally is something that when you want to bring it down, it comes reluctantly. What economists call, stickiness of downward trend in inflation. To bring inflation down, it is more sticky than something that will trigger it upward. So it takes time. And you will all agree with me that the last headline inflation stood at 22.22. This is not where we were 1 year ago. Nigerians should recognize that before now, we were over 30, percent of inflation. At one point, we were 34. Before, we are now trending downward and gradually to 22.2, which shows the efficacy of the tools that we are using. I want to let Nigerians know, to measure the effectiveness of our tools, that we used to conduct what we call counterfactual analysis. Counterfactual analysis tells you what would have happened if you have not intervened. If the bank has not tightened at the point and at the rate that it has done, inflation today would have been approaching 40%. All this show that in the absence of this intervention, would have been in a mess. So to directly answer your questions, our orthodox tools are working, and we are hopeful that we will get there. Thank you.
So what exactly are the factors that is or guided the committee's decision to hold?
Okay. So in terms of considerations that underpin the committee's decision include, number one, the need to sustain the tempo of disinflation. We have seen inflation coming down, and we don't want to reverse the gains. We don't want any relapse. We don't want any resurgence in uptrend. The committee felt the need to sustain the tempo of disinflation so that we can have a full grip. That's number one. Number two, even though inflation is trending down, it is still at an uncomfortable high level. There's nothing like high and stable inflation. Inflation has to be low and stable for it to be conducive for growth to thrive. And so, all over the world and in line with best practice, what is desirable in every country is a single-digit inflation. Right now, we are double-digit, and so the MPC thought that it is not yet to huru, and so there is need to sustain the tightness of the stance to be able to bring inflation down further. The last point I want to mention is still the headwinds from the global environment. You all agree with me that the trade war and its fallout are still persisting, and there's need to hold a cautious approach to be able to assess the situations as it unfolds.
So when we look at all of this, I think one of the things that the governor talked about yesterday was the much talked about need for a handshake between the fiscal and the monetary authorities. And he seemed to give the impression that that has started. From your perspective, what are some of the specific measures that you think can bring this collaboration closer for the benefit of the economy?
Yes. Macroeconomic stability is a collaborative agenda. It's a collaborative objective. We are operating a single economy. So our inputs and roles as monetary authority and that of the fiscal authority has to complement each other. And that handshake is operationalized through what we call policy coordination. And as the governor mentioned yesterday, a lot has been done in that aspect. There are a lot of meetings that goes on at various cadre, and even at the topmost management level. We have seen a number of times where Mr. Governor and the Honorable Minister of Finance and the Minister of the Coordinating Minister of the Economy has had to meet and discuss issues of common interest. We have seen the resolutions. As I speak to you, and for the first time in many, many years, the issue of ways and means advances, a practice that if you do that beyond the statutory limit, it can, trigger inflation. That issue has been laid to rest, and there is no more advances through ways and means beyond the statutory limit. And this is evidence of what we call coordinated policy between the two authorities. There are several other ones that are still ongoing, discussions among the technical level, among management level, to see that all these are done. So there are ongoing coordinations that are going on to ensure that there is a deeper handshake between the two authorities.
All right, Dr. Obo, thank you so much for telling us the considerations of the MPC before they arrived on their decision yesterday. Director, Monetary Policy Department of the Central Bank of Nigeria, thank you so much for your time.
Thank you. It's my pleasure.
Yeah, welcome back. It's still Business Incorporated here on Channels Television. Let's head to the markets now with Will Ibon. Will.
Any fantastic news coming out from Africa's markets, but we'll just see that in a bit. But let's just jump right in and see how markets performed. Nigeria is still holding on strong to that new level hit yesterday. So markets, major markets in Africa were mostly positive at intraday. We see Nigeria's NGX trading higher, 0.07%, still holding on to 132,000 points that we crossed yesterday. Well, let's look at South Africa. It was trading up 0.9% to hit 100,000. And now the Johannesburg Stock Exchange in South Africa, that's the JSE, today marks a historic milestone as the FTSE, that's the JSE All-Share Index, hits that 100,000 points, crossing that psychological level for the very first time. And that's 1,000 times higher than its starting value of 100 points in January 1960. Now let's look at elsewhere. Egypt's EGX is down. Let's look at EGX in Egypt right now is down at intraday 0.02%, and we also see Kenya's ending Tuesday's session in positive territory, up 0.81%. Now let's see what's happening in the fixed income market now, away from equities for a bit. Well, we're going to be joined by Chuka Nwachukwu, Chief Dealer, Group Head Trading, UB. Good afternoon, Chuka. It's good to have you on the show.
Good afternoon, Will.
Okay, so Chuka, yesterday the CBN MPC held rates for a third consecutive meeting. Was that your expectation, and what does this mean for the fixed income space?
Well, thank you very much. Actually, my expectation was that MPC will cut rate maybe by 25 basis points, but I haven't looked at the reason given. Of course, one is the price stability, and secondly, the need to, to maintain cautiousness, especially with the tariff war, and then the economic uncertainties. And so it made more sense for rate retention, which is obviously what they ended up doing. So for fixed income market, nothing really has changed so far today. And the reason being that the market actually more like a lot of traders felt that is going to be the rates are going to be retained, and so the usual sell down is what I've actually been experiencing, especially on the longer end of the T-bills market, which is the 1 year paper. Today, so far trading has been a bit quiet, due to the NTB auction, and then so I hope that the results should be out hopefully in the next 2 or 3 hours.
Okay, before we delve further into the NTB auction, let's look at the impact of this continued hold by the central bank. That's the monetary policy. What does this mean for yields, say in the short to medium term?
So what it means is that all parameters are held. 50 basis, 50% on the CRR, and then the asymmetric corridor. Everything retained. So what it means basically is that the CBN is okay with the monetary policy they are currently pursuing, price stability. For the market and the fixed income market especially, we know we're going to continue to see downward trend in the yield. If you notice, last NTB auction, what was maturing was far higher than what was offered, and so indicating that DMO is okay, borrowing at these levels, and so that we obviously drive the yield further down. So on the bond side is again the same approach is happening. DMO is cautiously in a gradually in a decline in the yield, and so we've seen yield drop more than 3 to 400 basis points from April to now. So this we continue, especially going into the third quarter of the year, and then of course towards the end of the year we'll probably start seeing traders start building position going into the new year.
Okay, now let's jump back to the NTB primary market auction, which is taking place today or took place today. 290 billion naira on offer. What are you seeing across for investor appetite, market players? What were they playing out across the 91-day paper, 182, and the 364-day paper?
So what we're going to see still decline in yield. The last auction 1 year, it dropped by almost 250 to 300 basis points, and so that's that bill is currently trading around upper 14, 15 levels, and so we're going to see oversubscription because of the fact that FAC system is a bit liquid. There's been some FAC inflows that started coming in last night and then today as well. So the subscription is going to be the auction is going to be oversubscribed. And then when that is done, and obviously it means that yield will further depress. And so I would expect to see another about 50 or 100 basis point drop in the yield, especially for the 1 year.
Especially now that we still have this hold stance on interest rates, so yields are bound to drop in the fixed income market. But Chuka, do you see what are market players in the secondary markets? What are investors playing at?
So the secondary market has been very active, especially with the reintroduction of the two-way quotes, by FMDQ, and so we've seen a lot of liquidity in that market. And so, what plays out, especially what has been playing out, is that those who lost at the last auction, and do not forget that the last auction was oversubscribed and hugely oversubscribed, and so those who lost at the auction, brought those demand into the secondary market, and so that's why we've seen further, depressed, further yield depressed, and then of course this will continue. I said earlier, I do not see any change in terms of the pattern. Obviously, it's going to be this current auction is going to be oversubscribed, and then from tomorrow we see, those who lost at the auction coming into the secondary market, and that will further depress the yield. And so I see the 1 year paper, the T-bills, trading around 14, upper 13 levels, and that's for me it's very significant because judging from the fact that this within the just over 6 weeks ago, we saw rates around 18, 19 levels, and so what it means is that those who bought around that levels, you obviously be smiling to the bank now because the yield has dropped over 500 basis points, and that's quite huge for any investor.
That's a huge one, a big blow for investors, but the government, I believe, will be smiling. And let's hope that the allotment, when the settlement date comes in, that's tomorrow, we'll see how much the DMO is going to allot to investors, if they will under allot or over allot. Thank you so much, Chuka Nwajuku, Chief Dealer, Group Head, Trading, UBA.
Thank you.
So let's see how other markets in the Middle East are performing. Gulf stocks rebounded on Wednesday following U.S. President Donald Trump's announcement of a trade deal with Japan, and this has fueled hopes of further agreements ahead of a fast-approaching tariff deadline, which is August the 1st, while positive corporate earnings also boosted market sentiment. Let's see Dubai, how they performed, 0.44% at intraday. We see Abu Dhabi also performing so well, 0.94%, 10,274 points. Let's see in other regions within that space, Saudi, that's the Tadawul index, also up 0.83%, and the Qatari index also up 0.42%. Now, news coming out of the UAE, you see that equity capital markets in that region, the UAE could see as many as 5 listings before the year end, and more private firms and follow-on offerings should tap the markets, and that's according to Citi. Let's move now to the U.S. and see how markets performed after the news of the U.S. and Japan trade deal. We see stock futures jumping on Wednesday. They rose 0.52%. S&P 500 also rose 0.4%, and NASDAQ 0.2%. And this is coming after U.S. had announced that they reached that deal with Japan, and this lifted hope for further agreements being made. We see the futures, we mentioned that already. But let's look at other markets now in Asia. Let's see. Oh, but before we go to Asia, let's see how performance was yesterday with our correspondent, Maria Bird.
Stock market had a mixed day on Tuesday as the Dow Jones was up at 0.4% and the heavy tech Nasdaq was down at 0.4%. But the S&P 500 eked out a record-setting day, even though they closed just above flatline. Many investors started off slow in the beginning of the day with losses on the horizon, but after the trade deal was announced between the U.S. and Philippines, the U.S. stock market took an incline, as many investors are hopeful that these trade deals could mean a positive light for the U.S. stock market.
Thank you, Maria. Now, the U.S. has been pushing to reach trade deals with other countries, and this is ahead of that August 1 deadline that comes after Trump on April the 2nd sent markets into turmoil with his announcement of sweeping tariffs. Let's look at Asia markets now. Really big one happened there. Positive sentiments on Wednesday after President Donald Trump announced a trade deal with Japan and fueled hopes of more to come. Markets are really expectant. Japan's Nikkei jumped 3.51% on that news as shares of automakers surged on the news. Deals were lower. The auto tariff to 15% from a proposed 25%. That was a huge one for Japan. Mazda Motor rallied 17%, while Toyota Motor jumped 11%. Also, in Japan, the Prime Minister Shigeru Ishiba has denied reports that he plans to resign in August. He told the media he has no intention to step down. Now, in South Africa, let's look at South Korea, rather. Kospi rose 0.44%, and the Hang Seng, if we move to China, we see that also rising over 1.6%, while in mainland China, we see it inching up just a little bit above the flat line, 0.01%. If we could have that on the screen. India's Nifty 50 also edged up at 0.6%. It's really a fantastic move for Asia markets now. Auto dealers and auto shares are really on the rise in the EU, and I must have mentioned that earlier, and also other auto stocks across the world, hoping for Trump to give them a great deal. I'm just hoping that, well, maybe I'll just start an auto company just to get this deal too.
Too late. Too late, Will. All right, thank you so much, Will. So let's head to Berlin now, where we see that it seems that the good news from Japan spills to the auto markets, at least for investors in the auto industry, even there in Europe. But Emily joins us now to give us updates, what's going on in the market and others. Hi, Emily, good afternoon. I hear the market, at least investors in the auto sector, are looking good and very expectant.
Hi, good afternoon. Yes, the news of the trade deal between the U.S. and Japan has caused a positive effect on European markets. This morning, the shares of European markets rose. That includes the Pan-European Stocks 600 index, which gained nearly 1%, and that's following 3 straight days of decline. So news of that trade deal definitely had an impact here. And Britain's blue chip FTSE 100 for a fifth session recorded a record high. That was also good news for investors. And they are keeping an eye on company earnings statements, which we can expect to trickle throughout this week. Some of those earnings, shares of SAP were slightly down. That's despite the fact that the German software maker posted quite a significant revenue jump in last quarter. But overall, shares were up.
And they're not so good. We hear hackers were able to gain access to the IT systems of German businesses and government organizations earlier this week. What's this about, and how's it going now?
Yes, you're right. Hackers, they were able to gain access to the IT systems of German businesses and government organizations earlier this week. That was through a Microsoft product that's used by countless companies around the world. There were about 100 businesses that were affected. They were mostly located in Germany and in the U.S. Once these hackers were able to get into SharePoint, they were able to gain access to the enterprise systems of these companies. And we don't know exactly which companies were impacted just yet, but experts have said that the servers could have included the information of major industrial firms, banks, auditors, healthcare companies, as well as government organizations. And the hack was eventually discovered by a cybersecurity firm that's based in the Netherlands. And they realized the scope of the hack, how many people had been impacted when they noticed that one of their own clients had been compromised. And authorities haven't said who is responsible, but Google did suggest that the attack may have come from China. That was after a review of their web traffic analytics.
Well, I hope that doesn't bring another, a friction between the two countries, mentioning China. But how big of a problem is cybersecurity attacks in Germany? And has the government outlined perhaps plans and steps to curb it?
Well, cyber attacks are increasingly a problem here in Europe. Last year, in Germany, there were more than 333,000 registered cyber crimes. It's from inside Germany and abroad, according to our country's federal police here. They also say that 90% of cases go unreported. So that number that I just quoted is probably much, much higher. And back in February, there was an attack that flooded the servers of a police station in the city of Bremen, and no one there was able to contact the police for 2 hours. In another case, an attack incapacitated the local administrative systems of a town and affected it for half a year. And just yesterday, it was reported that a media group here in Germany that owns many newspapers in the southern region was subject to a hacking attack a few weeks ago. That's a Südwestdeutsche Medienholding, and they're now working with authorities to figure out who is behind it. So the EU and Germany definitely recognizes that it's a growing threat, and they're taking steps to protect the government and companies. And one of the ways that the EU has done this is by implementing a law called the NIS2 directive, and it requires businesses across the bloc to implement certain tools and workflows. Businesses have to train employees. They have to invest in the right software. There are procedures that companies have to take if they've been subject to the kind of attack that happened earlier this week on the German newspaper group. They have to report security incidents within 24 hours. And then there are penalties for companies that don't comply that can cost up to 10 million euro. So the EU is passing legislation to try to shore up cybersecurity for businesses within the bloc. But Germany also has a similar domestic law that's expected to come into effect at the end of the year.
Well, it sounds like it's a serious thing that needs more attention. But thank you so much, Emily Leshner, for giving us insight into what's happening in Europe.
Thanks for having me.
Let's come back to the African continent now. We're starting from South Africa, where inflation quickened to a 4-month high in June, complicating the central bank's task as it prepares to review interest rates. Consumer prices rose 3% from a year earlier, compared with 2.8% in May, while inflation has now been near the floor of the central bank's 3% to 6% target range for the 9 straight months. The outlook is uncertain. That's likely to prompt policymakers to proceed with caution after reducing interest rate by 25 basis points to 7.25% in May. Chinese deflation, a weaker dollar, and uncertainty about how nations will respond to U.S. President Donald Trump's tariff onslaught, they're making forecasting a nightmare, according to South African Central Bank Governor. And from South Africa now, let's talk about the new oil for Africa, and that, they say, is data. They say it's the new oil, but I don't know if it can bring in the FX, or it has already started bringing in the FX. We have Stephen Odua, data analyst, joining us for this conversation. Hi, Stephen. Good afternoon and welcome to the program. I think you're on mute, so I didn't hear that, but I'll just assume that you would unmute yourself and tell us more about this. It's no longer a new one when they say that data is the new oil. Has it started giving us FX on the continent?
Sorry, I didn't get that question.
You guys say that data is the new oil. Oil gives us FX on the continent. Has it started bringing in FX?
Basically, when we say that data is the new oil, what we're trying to say is that it sort of highlights how valuable data has sort of become in our world. But for us to understand it, we have to go deeper. So to go deeper, we think about crude oil, how it has no value, so to speak, in its raw state. then for it to get value, you need to refine it into petrol, diesel, plastics, and so on. So in the same breath, you can say that data is exactly the same thing. You say raw figures would mean nothing to you until you sort of clean them, process them, and then extract insight from them. So a typical example was during the COVID-19 pandemic in Nigeria, the Lagos state government used data from hospitals. They also used contact tracing tools and then local reports to sort of identify areas with rising infections. And this allowed them, so to speak, to deploy mobile testing units and health resources where these resources were needed the most. And typically, that's what refining data looks like. When you refine it, it becomes intelligence. And then you also see this with, let's say, companies like Jumia, where they use customer data to understand what people in different regions are buying and at what point they want to buy them. So this insight helps them make decisions on logistics and marketing. So without that refined data, basically they'll be operating on guesswork. But one thing that is even more important in this discussion is that oil is finite. So we know we have our reserves. After some time, the oil is gone. And once it's gone, it's basically gone. That's the end. But for data, whereas for data, it keeps growing. And then when you use it well, it creates even more value. And this is what makes data not just a new source, a new resource, but potentially a more powerful one. Especially if we use it responsibly and then share it wisely.
So, I mean, 2 days ago, we got the rebased GDP for Nigeria, and we saw services, producing or contributing a whole chunk of it, of the GDP. Where does data use, gathering, where does it come in to help us broaden or increase these benefits from especially the services sector, since we see our strength there now in the bid to diversify Nigeria's economy?
Okay, so basically when you talk about diversifying Nigeria's economy, it's not just an economic goal. For Nigeria, basically, it's more about survival. And we've seen what happens when oil prices crash. When it crashes, budgets suffer, projects stall, and then ordinary people feel the impact. But when you talk about diversification, it can't just be a slogan. It has to be strategic. And then that's where data and then AI plays a major key role. Let's take agriculture, for example, right? Farmers now have access to platforms that use satellite data and then weather models to give them advice on the best time to plant and then harvest. And then there's a company in Nigeria called Crop to Cash that is actually doing great work by helping farmers access financing using data on their past yields and farm activities. And this has made it easier for banks to trust small farmers who don't have traditional collateral. And then when we move on to healthcare, platforms like Helium Health are helping hospitals to digitize patient records and sort of share insights securely. And this helps health authorities to sort of track disease trends and then help them plan better. And it also allows hospitals to manage patient flow, reduce delays, and then improve healthcare. And then if we also look at education, it's another area where AI and data is of immense benefit. We look at Open States. I know for a fact that there was a pilot project that used adaptive learning software to track how students were performing. So because of this, teachers could see in real time who was falling behind and adjust lessons to support them. So you see that's data helping to personalize education and keep more students on track.
And there's also the need to intensify data protection. We just talked about cybersecurity in Europe.
Yeah, very, 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 very true. You need to also include that when you talk about strengthening cybersecurity. It's one of the important challenges because without trust, you can see that all the gains from data and artificial intelligence can quickly fall apart. And I can say for a fact that on data privacy in Nigeria, we've made some progress. For example, the Nigeria Data Protection Regulation Act, which was introduced in 2019, it basically sets a basic framework for how companies should collect and use personal data. But in reality, we actually need to do more because right now, the law doesn't sort of cover all sectors strongly enough, and then enforcement is still weak. So you can compare that to, let's say, countries like South Africa with their Protection of Personal Information Act, which sets clearer rules and it has a dedicated regulator, and also places strong emphasis on user consent. Sorry. So beyond laws, we also need education. Like a lot of Nigerians sign up for apps and platforms without fully understanding what they are agreeing to. So we basically need to teach Nigerians from secondary school upwards about what data privacy means and how we can protect their digital rights.
All right,
Yes.
thank you. Thank you so much for that, those tips, Stephen Odua, data and AI technology analyst.
Thank you very much.
Other stories on the continent, the Energy and Petroleum Regulatory Authority have raised pump prices for the period of July 15 and August 14, 2025. And this, according to the Energy Cabinet Secretary, is explaining to members of the parliament that the government continues to stabilize prices under the G2G arrangement. Adai reveals that the arrangement has been extended further to 2028 following the government of Uganda's decision to import oil. President William Ruto's administration signed a government-to-government agreement with the three oil-producing companies from the UAE and Saudi Arabia in March 2023. The deal is aimed at allowing the country import fuel on credit in a move to lower rising prices and stabilize exchange rates. And in Zambia, the country has signed a landmark agreement to build $1.1 billion crude oil refinery and energy complex in Ndola, marking a significant step towards energy self-sufficiency. The project will process 60,000 barrels of crude oil every day. That's enough to meet the country's entire current fuel demand and potentially supply neighboring nations in the future. The refinery, to be located in Zambia's Copperbelt province, is expected to drastically reduce the country's dependence on costly fuel imports and save millions of dollars annually. And then we move to Ethiopia at this time. Ethiopia has disclosed that it has secured a record $32.1 billion US dollars from foreign revenue sources in the fiscal year 2024-2025, and that's up from $24 billion in the prior fiscal year. The record shows this is a notable growth. Finance Minister Ahmed Shide emphasizes that Ethiopia's ongoing macroeconomic reform agenda has played a pivotal role in driving multifaceted growth across various sectors, including agriculture, industry, tourism, services, and mining. Still in Ethiopia, as part of ongoing efforts to modernize and reform public finance management and to foster market-based deficit financing through domestic currency treasury bills and bonds market, the Ministry of Finance in that country has published its first 3-month treasury bill issuance calendar. This milestone supports the government's reset, reform, and relaunch agenda, deepening the domestic debt market and improving transparency by giving market participants clear visibility of upcoming auctions. The calendar enhances predictability and builds investment confidence. It also underscores the government's commitment to borrow domestically in ways that limit inflation and safeguard macroeconomic stability. From Ethiopia, we head to the crypto space and see what's happening. And someone said I did influence the color of the day. I don't know how true that is. I don't know if I have that much power. But there you have it. It's a red board this afternoon for BTC. Bitcoin has lost about 0.52% in the last 24 hours and is on $118,000. $180,519.66. That's for BTC. And of course, that has dropped off to major alts. We see Ethereum, Solana, Cardano, XRP. Most of them are in the red this afternoon. A lot has been moving, so it's an inverse relationship for today for the stock market following the deal between the US and Japan. We saw the markets are happy, especially the auto sector. Both in Europe and in Asia, but that has not moved over to here. I guess that the crypto market doesn't have anything really to do with auto, yeah? But let's see other headlines In the crypto space, BTC Incorporated has expanded its Ethereum portfolio significantly to 211 million in Ethereum. BTC holding over 211 million in Ethereum, and stock climbs 10%. That's one news. They said to finance the expansion, BTC raised $10 million through the sale of convertible notes. And these were priced at $13 per share, nearly triple the firm's June 18 closing price of $6.57. That's one news. Also, President Trump, of course, he's making some moves in the crypto space. So Trump Media and Technology Group, the parent body of Truth Social and Truth Plus streaming service, has announced that it now holds approximately $2 billion in Bitcoin and related digital assets. Are we going to see President Trump, a market mover in the crypto space soon? Well, we will see. This development marks a major step in the company's ongoing Bitcoin Treasury initiative, funded through stock sales and bond issuances. According to the company, about two-thirds of its $3 billion in liquid reserves are now allocated to Bitcoin. An additional $300 million has also been earmarked for Bitcoin-related options, which could be converted into BTC in the future based on market condition. There you have President Trump and his company there. And then another story is CoinShare, a major European cryptocurrency investment firm. They've secured a license under the local regulatory framework market in crypto assets, and CoinShare received the MiCA license through its French subsidiary, CoinShares Asset Management. The company made this announcement today. Let's talk about this. Hi, Olumide. Good afternoon and welcome to the program.
Good afternoon. Thanks for having me.
Good to have you. I'm sure of all the stories. President Trump's company now has about $3 billion in Bitcoin. Is that significant enough for you?
Yeah, the excitement in the market has already been priced in. I think what we're seeing right now is immense profit taking, particularly around the altcoin space. Recall that Ethereum was about hitting the 4,000 resistance before cooling up and trading about 3,600. Certain altcoins like Tezos almost doubled within a week. So profit taking is on play despite the United States deal with Japan, which you were surprised hasn't really brought green on board. And another major reason is that on-chain analysis, particularly at the blockchain where Bitcoin resides, we've seen whales selling, whales that have been dormant for years, selling, and that's unsurprising, because the rally right now seems to look like it's peaking. And I think it's fair for some big players to take profit on the table. However, I think with the US dollar really sinking deeply this year, and the US Fed still holding on keeping rates that level, we shouldn't be too excited in long term. Yeah, you could argue that the Genius Act, you could argue that the adoption of stable coins by traditional finance will definitely boost the crypto space, but insiders action, particularly the banking industry, especially the banking industry, seem to be unhappy. We recall that a few days ago, United States banks and the credit union wrote to their regulator, the OCC, that they should pause on issuing a banking license for Ripple and Circle. And that really has to tell you that, yes, we have scaled the regulatory, but it still seems that all still has to be worked out because the integration, the acceptance, particularly among the big players, is still far from being settled.
Yeah, obviously, I guess it's not an easy thing. It's a change. It's a new thing. So it will take time before full trust is gained and adoption, can take place. But just before we let you go, Lumide, how long do you think this profit taking will last for? Is there any major factor that can change the tide anytime soon?
The parabolic situation in the crypto market makes it very difficult to pinpoint a fundamental as the major reason. However, I think I'm long-term on Bitcoin, probably on Ethereum, based on the fact that those upgrades are really damping concerns around that space. However, I think we are seeing the fact that altcoins seem to be faded glory despite their recent rally, with the exception of BNB because of Binance ecosystem. It's very difficult to play long-term view generally on the crypto market, but I think Bitcoin, Ethereum, and major altcoins are here to stay.
All right, and the stable coins also seem to be finding their way into the traditional system. Thank you so much, Olumide Additional, for your time and your views this afternoon.
Thank you for having me.
Okay, so that's it on the program. Thank you so much for being a part of Business Incorporated. 55 minutes of going around the world of business. We'll do it again tomorrow, God's grace. I'm Ini John Mekwa, wishing you the best of the rest of your day. Bye-bye.